Hi, everyone, and welcome to our Flashpoint LinkedIn Live discussion and the series of podcasts that we titled The Family Office Edge, Educate, Govern, and Invest. And today I wanted to discuss and raise a topic that is as timely as ever, the great transition of wealth between the family sort of members and succession of family planning. This is one of the topics we discussed a lot during our last Investor Day at Flashpoint in March this year, and Carolin was one of the speakers and guests. And we had a great conversation that we would like to continue. So I wanted to introduce Carolin to our great audience. Carolin Schönherr is from Risk as Service and has been an expert in risk management, governance, and a big advocate of education around about family office management and topics alike. As always, I wanted to say that this podcast does not constitute any financial advice, and we're going to discuss, trends and opinions today. We would welcome some questions in the end, and then also we'll be referencing some reports that are recent from UBS and Camden that cover some of the recent trends. So. Carolin, welcome to our podcast. It's a great pleasure.
Thank you. Thank you. It's always a pleasure to catch up, Alex. And it's great to talk about what good governance and risk management really can unlock. And I think adding, as you said, targeted and bespoke education really lifts it to the next level. And you're right, the Investor Day keeps, those conversations, those keep continuing. And so it's a good time for the session. So when we remind ourselves, it's really the largest wealth transfer in history, right? We're estimating that the total wealth that's going to be transferred in the next 20 years will exceed the GDP of China. Also, at the same time, we see really the number of family offices rising. Deloitte estimates that they're increasing by about 30%.
Yeah, I saw some figures which are mesmerizing, and at first I did not believe that. Over 80 trillion of wealth is estimated to be transferred between generations in the next couple of decades. This scale of wealth transfer brings sort of on the scene topics about education, governance, investment strategy. They become more critical. So in your opinion, how does succession enable responsible wealth stewardship and management?
I think it isn't just about money, right? It's about control, it's about responsibility, and really also the question is, how do we sustain wealth across generations? I think we've all heard about the third generation curse. We've all heard about history showing us that 70% of wealth transfer really fail by the second generation, 90% by the third. So how do we create clarity? How do we give families purpose, vision, and create adequate qualifications? And I think most families will want to avoid becoming such a statistic. So where we have formal governance, where we have formal wealth education strategies, really we can create a holistic structure. We can create something with a purpose where we have a shared vision, where we have an understanding, and then we don't just talk about protecting assets, but actually we talk about how do we lead, how do we generate asset wealth.
When it comes to family offices, thinking about like these issues, how do you think what strategies do they take to, manage things better?
So we often start with a structure plan where we say, well, look, first of all, start with thinking about it. And this sounds so obvious, but actually, really, you might already have something in place, or we might be starting from greenfield. So the first question really is, where are you? Have you already set up a legal entity to manage your wealth? Or is this still all part of the operating business? Where are you in your journey? So it's an as-is assessment. We want to know where you are, but we also want to know who is in your family, who is part of this construct. And that's really simple when we're talking about first generation. But the minute we're in the second, third generation, sometimes with multiple branches of families, this becomes much more complex. So again, first step is always to say, what's the scope of your family office, both in terms of who's in it, but also what are the activities. So some families will want to set up a foundation. They will want to invest. They will want to sponsor an orchestra. They will want to sponsor a museum. Is that what your family is about? So what are your values? That's step one. Then we start, once we understand that, we want to understand your target operating model. Again, you might want to set up a legal entity, you might not. You might set this up as a separate construct. You might actually utilize existing structures. We then need to think about how we measure success. As always, it's really important. Once we've got clarity of what we want to do, how we want to do it, we want to know, how do we know we've done it? And as part of that, really, we look at talent management. And talent management is both for the family office members, like staff that we employ, but also for the family members. So you might say, I've got this amazing next gen, but I feel they should maybe have experience outside of the family business. So we then think structurally, where are already great knowledge and skills, and maybe where do we need to upskill? And then we need to make sure we revisit that. So it's really a 5-step plan. And where we start, and that's something that I think is very important, and that successful families, say the Rockefellers, do really, really well. What's your family values? And I would invite everyone to, to have that conversation with their family to say, what are our values? What defines us? Because everything we're going to talk about on the family capital, be it human, intellectual, spiritual, social, or financial, comes back to what the family values are.
No, this is, I think these are all very fundamental discussions, and some of them are not easy. It's not one size fits all sort of conversation. I think, transparency and clarity is important, but then, amongst a lot of Flashpoint investors, we have family offices, and we see them thinking a lot about governance. We see them create investment committees, decision-making protocols. What sort of governance models do you see and you think are sort of working and are helping families to ensure the sort of wealth continuity and avoiding conflicts and making mistakes?
So I think, first of all, when we talk about governance in the family office, we need to think about what that means, right? We're not in a big bank here, so let's think about that. And I think really that can be both the legal setup, you've alluded to that. You've also alluded to what's our decision-making model. Do we want to have an investment committee? Do we want to have a board? Do we want to have a family mission? So again, let's think about both the formal setup, but also the internal mechanism. But then it also has things like succession planning and a family charter, which comes back to the values. And again, I think what makes success here is we need to know who's in the family. We need to know who's contributing and who's benefiting. And those are two potentially different groups of people, but it's important we talk about that. There might be siblings who are actually running the business, but not the family office. There might be relationships where that works, there might be relationships where that doesn't work. So I think we need to think about the structure. Not all families, offices, not all families are created equal. So we need to think, where are we in the generational life cycle? Is this a first generation entrepreneurial family, or is this maybe a family that has been around since the mid 1800s? So we need to think about, is this family office meant to last for multiple generations? Yes or no? Some very wealthy individuals have decided that they want to have a family office to give away their wealth. That's a very different setup. You will choose a very different structure in that case. So I think we need to come back to, do you want to create a legacy? Do you want to give your wealth away? And who is in your family? And once we've asked that question as part of the initial scope, then we talk about which form, which kind of office we choose.
Yeah, that's very interesting, and to some of our audience, it might even sound, complicated. But hopefully, we can clear more of that. Some of the models that we've seen and we've come across are either multi-family offices, single-family offices, or even virtual offices. So, talking about the things that you just mentioned, when families are deciding and thinking like how their setup should be and what model they choose, what criteria do you think are like the best and people should be thinking about when deciding? And also running a family office could be a costly exercise, so how does it tie with the cost side of things?
So a single family office obviously gives you full control of privacy. And that might be the right answer to many people, but not to others. Because having a committed team that just takes care of your family's financials and other requirements can be very flexible to you, but it tends to come at a higher cost. And what you don't have often is you don't have resilience. So if in your small setup, if one or two people are running a family office, if they are not around, well, you're then exposed. So again, you're trading off full control, privacy, and discretion of investment versus cost and dependency. If you choose to join an existing, often multi-family office, well, you're benefiting from the shared experience. You're benefiting from a shared pool of resources, which should come at cost efficiencies. But at the same time, you're not the only client. And so you will be one of many clients. Now, this can be more affordable and it can allow economies of scale and operational excellence, but it comes with being one of many. And then what we see is often sort of as a first step is maybe what do you call a hybrid or virtual or outsourced family office. So we piece it together, where we say, well, we're not quite there yet. We maybe have someone who's focusing on, let's say, on the investments, but for more of the lifestyle areas, we actually outsource that. We buy that in from somewhere else. And really, I think that is one of the major decisions when we start thinking about the legal structure of what a family office should look like. We need to understand whether we want to buy, build, or partner. And really, that means we're going to benchmark against the best in class. We're going to take cost into consideration. We're going to take the effort of setting up multiple entities into consideration. And also, it's an honest question to say, where is the expertise of your family? Do you want to run this day to day with staff, or do you want to keep focusing on, say, the commercial side of the business? And so that's a really important consideration. And increasingly, we see fractional talent. So you might have say a CFO on a 2-day basis a week, where people split.
Interesting.
Yeah.
Interesting. One of the things that we've come in the recent reports as a trend is that obviously, family cohesion, diminishes over time, especially in like larger families where there are a lot of siblings involved. What practical sort of tools and do you see that could be, used in practice to ensure, family unity and ability to continue together?
I think it's a really important question, because again, what we see is that everyone starts with a shared idea and then it crumbles, right? And you want to avoid that because that's costly. And if anything, you have coming to your assets. And so again, you want to be clear. And I think that's where if you keep coming back to what is our purpose? Who are we? And I mean that quite, when we have life events, like if someone is getting married, if someone is getting divorced, what does that mean for our family office? If you have children, what does that mean? So life events like that, if children become of age, what do you consider it? Do you want them to have decision-making power at 18, maybe at 25? So again, I think the best way to avoid conflict is to have transparency and to have clarity. And so what we see really, what we see works is people talking about it. And that doesn't always have to be formal. That could be around the dinner table. It could literally be the founder, the first generation wealth owner saying that he or she has thought about it, that he or she has made decisions, and then discussing how that works for everyone. I think where it maybe doesn't work so well is people only find out afterwards what decisions were. And so I think, again, we will need to be proportionate in the setup, because there's no point to set up the most expensive, most singing and dancing setup for a really small affair. So let's think about maybe you set up with a smaller family office, and maybe philanthropy only comes in later on in life. Maybe that's not something you want to think about at the beginning, or that might be your whole raison d'etre. So again, it's specific, it's bespoke, but it needs to fit the family. And as you said earlier, it's maybe not always easy to have those discussions.
No, and I like your comment about the fact that it's not always about the money. And there is a quote saying that one of the biggest reasons for wealth disappearance is not about bad investments, but it's actually about family conflict. And we've seen some huge family conflicts over history that are killing, large, basically multi-generational families. So would you relate to this comment? Do you think it's...
Totally. I think we can find many examples of lawsuits, feuds, or TV series, if we want that, about how that plays out. And so again, if we go back and we say we want to protect the assets, we want to generate asset wealth, and we want to create family cohesion. And that's really where that 5-step plan started, is to say, let's get the foundations right. And sometimes we even draw a picture and we say, this is your generation 1, this is your generation 2, this is your generation 3. Do we all agree? And this sounds very simple, but sometimes it needs that clarity.
And it takes time to figure out, yeah.
It does. And again, someone might want to provide for their uncle and aunt, and that's great, but they might not be part of the family office. And so again, distinguish between what contribution and beneficiary means. So, again, if we think about really successful families, the Rothschilds, I think, come to mind there. They have regular family meetings, they have structured communication, they have clear governance. And, when we look across some of the educational programs across the world, they actually say, we will show you how to run that family meeting. Which sounds funny if you think about 5 people, but maybe if you think about 50 or 100, it's not so funny. So again, proportionate, transparent, and clear. And then I think we can think about what that means. Maybe you start with making sure you have one structured conversation a month. Maybe that's all you need. Maybe you need to have an agenda, because over time it becomes so much more. Maybe at some time it becomes more akin to an away day that you might have in a more corporate environment. But it needs to work for that particular setup.
Oh, interesting. And I think indeed, family offices are adopting more, risk management functions, and, they are more thinking about institutionalizing their risk management in general through processes, through employing people. So governance in that sense becomes a strategy, not a passive, exercise, passive function.
I think that's absolutely right. And again, I think if you can make decision-making informed by your risks and aligned to your strategy, that's what sets you up for success.
Perfect. Now to maybe shift the gears a little bit, and I see we have some questions coming in, but as promised, we'll have a Q&A session in the end, so please be patient. Hopefully you stay with us till the end and we can have some discussion around your questions as well. But maybe shifting gears to the investment side of things a little bit. So we at Flashpoint, we're big fans of technology and investing in alternatives. And we are seeing more and more reports basically saying that family offices are allocating more of the basically capital to alternatives, private equity, venture capital, other alternatives asset classes. Crypto is coming to mind. So what shifts do you see in the allocation strategies, and how are people thinking about balancing, risk versus return?
I think, Alex, we often see allocation and investment strategy changing when new members join, right? So when new generations come along, and they might have a different perspective, they might have more knowledge, they might have an exposure, and I think crypto obviously is an obvious one here, than some of the other generations. And I think we can often also see thematic investing, like ESG, sustainable. So we see a lot of movement in that space, right? But again, I think the key here is to say, as a family office, do we have a clear process for changing our allocation strategy, for changing our investment making process? Diversification, as always in life, tends to work best to balance existing assets and emerging opportunities. But I think really, when we think about effective governance, I would ask the question, and I would say, well, so in your investment strategy, in your risk appetite, in your investment committee, how do you go about that? And so I think that's maybe where I would go back to and say, you should have processes that are flexible enough, but protect your overall. So what you maybe don't want, if you're a traditional investor and you have a change in the family, and now you move 100% from day one without consulting. That's maybe not so successful. However, to say, hey, we say we're willing to invest in a different pot, we've made a decision, that's the return we're seeking, and we're willing to accept that risk.
No, that's true. And I think what we're seeing is that the next generation who are inheriting the wealth, I think they not only want to be, passive, basically receivers or recipients of this wealth, but they also want to be part of their sort of society and the trends that are happening right now. So on one hand, we see, and that's supported by some reports by Camden Wealth, for example, that about a third of family offices are trying to basically shoot for returns above 10%. And then the next gen sort of succession, they are more favoring impact investing. They are looking at clean tech, space tech, a lot of like new things that were not in existence like 50 years ago. They're thinking about venture capital. So they not only want to inherit the wealth, but they also want to, play their own role and part in that and reshape sort of the legacy in a way, if you will.
And I think that's really important, right? It's that you need to be at the table, but we need to also help them to make informed decisions. And I think that's really where I see, that shifting allocation investment focus is it's a big opportunity. It's a big opportunity for you, say at Flashpoint or for changing with the assets, but also it allows us to gradually give the next generation more say, to give them more of an impact. And again, I think, we talk about succession planning. And to me, the most successful succession planning is when you have a mentor relationship with the next generation, when you can be a friendly, challenging partner, when the next generation can come up with an exciting new opportunity that maybe the other generation hasn't seen yet, but they both talk about it. And that's, we can see that at joint family learning days, where we actually then go and we say, well, why don't we all find out how that works? But also, like, sometimes this is, beyond just the balance sheet and the alpha we can get. Really, families want to build a stronger family unit. Families want to create cohesion. And so I want to say it's a great opportunity.
No, and I think I would totally agree. And I think that on our side, our typical investor, and we have close to 200 investors across Flashpoint, is a family office, and the best investment discussions we have is where the decision process is like clear, and people understand the options they have. They can have meaningful, thoughtful conversations about that. I think one element that is important here is the actual team, also at the family office. What do you think about that? How do you get it right?
And I think again, right, it's so important because it's not just about the money. You want to set up. Often family offices are set up by people who've been very successful in setting up a commercial business. So they've built already. They know how to build a successful commercial enterprise. And so really, when you want to preserve the family legacy, you want to make sure that the decisions allow that wealth to continue. And so we can talk about that almost being a team sport, right? And so we need to think, if I know what I want out of my family, then often people might start with a sort of generalist. It can be a COO, chief of staff, whatever that space, and someone who can then start to help them build. We often see people focus on the investment side first because people often understand that element and it's measurable. But again, I want to say is be clear. Do you generate more return by investing yourself, like by literally setting up a little portfolio management team yourself, or would you like to allocate to hedge funds, to venture capital, to PE, whatever your choice is? So I think that's a first decision, right? Is this something you want to do in-house? But also you will need legal experts, you will need tax advisors, you will really need cybersecurity professionals. Because again, I think, if we think about the external threats to family offices, they will come in that space. And so I think that's an interesting connection with what you said about investing on tech environment, right? So you can say, well, where do we want to be the expertise of this family office? And so when we think about setting up that family office, when we think about that team, I would say, tell me about what's most important to you. If you need someone to help your family organize their lifestyle, like a concierge service, that's great. That can be part of the family office, or you can buy that in. If you want to have the main focus is going to be on managing family liquidity, okay, that's almost like an internal treasury. We can talk about that. And so I think we go from the scope to the outcome we achieve to the team we need.
And just thinking about that, I think one of the interesting, practical elements of that, which I was like always wondering about, what works like better in your mind? Do some of these professionals come better fitted and better sort of applicable when coming from inside the family office, or if they are, just professionally hired, third-party individuals? Like, how do you see that?
I think that very much depends on your family. If you happen to have a family of people who are qualified and eager and able, there's no reason why it cannot be family members. However, at the same time, I would also caution and say, we need to be clear, we'll come back to that, who contributes to benefits. Yeah. So it could well be that you have a family and you decide that there's certain members of the family who have the capacity and the ability to work in the family office. And that's amazing. But there might be others who don't. So what does that then mean? Do they both have decision-making power? Or does one then say, well, you know what, I'm quite happy to just take my dividend, basically. So
be passive.
Yes, and I think that is that honest conversation. And some people might say, well, look, I don't want to have to do anything with it, so just send me the check. Some people might say, no, it's my money, I want to be the one managing it. So I don't think it's necessarily wrong or right. But I would say, if you decide to have some family members involved and some not, the need for clarity has just increased significantly. Because you could feel, that's what I mean, some people might feel that their decision influence has been diminished or increased. So again, this comes back to when we talk about the skill set in the family office, we almost say, look, let's draw a matrix. Let's think about what skills do we need. So if you'd said the family member wanted to be the chief philanthropic officer and wanted to focus on that, well, again, I would hope that that person has some knowledge, interest in that area, other than just wanting to be part of it. So that's what maybe I would suggest.
And how does this selection process work? Because somebody's eager, willing, etc., but he's part of the family. Will there be any prejudice, against this person, if qualifications are not there? Or how do you see this process of finding sort of the right job description versus inherent family eagerness to be involved? What is the...
And again, I think that's where this is so interesting, because we now have emotions involved as well, right? And so I would say to almost take it a little bit out of that personal emotional space, I would start with saying, let's say we've started thinking about the family office, we've started about the activities. We know we want the foundation. Let's use that as a simple example. Then I would say, well, at the beginning, we need to think about what activities are involved in setting up a foundation. And then we develop a skills matrix. Then we say what skills are required to set up a foundation from scratch. And then you say does the person have that? And that's where almost a family board of independent advisors is really useful. And so think about that, like a senior independent director, maybe one of the listed companies, you assemble your family board. And
that's where we come to the governance.
Exactly. And that's sort of that's the big umbrella structure, really, where you say you have all the investment committees, you have all that day-to-day reporting. That's beautiful. You set that all up. But to bring it all together, having a number of independent advisors on your family board allows you to have that discussion honestly and without being too emotional.
Perfect. Carolin, thank you very much. And I think it was interesting to cover some of the topics about governance, education, investment strategy approach, backed by all the various industry trends that are changing. So thanks a lot for your insights. It's a great pleasure. I think before we wrap up, we wanted to take some questions from the audience, and I think we also had some questions coming in offline. I think one of the questions from the audience is from Maxim. Shouldn't the governance be the part of the broader succession plan?
Thanks, Maxime. I would actually turn it around. I would say succession planning is part of governance. And so I fully agree with you. And I want to say good governance makes sure that you have effective succession plan. I think we should maybe talk about what an effective succession plan means. I think it means a number of things. Again, it comes back to the who's in the family. Let's assume we have a current generation of decision makers. That can be first generation entrepreneurial wealth, or it can be generations that have managed previous wealth. The question is, do they hold current shares in the family office? Who do they pass on to? Again, I'm coming back to my life events. Should you get divorced, do the shares come straight? Do spouses get shares in the family office? Or in the family wealth? Do they have voting shares? So that's where we then come back to that legal structure of the setup. The succession can mean many things, but I think in the family office, once you've incorporated, once you've set it up, you want to really be clear, and you can have something like voting, non-voting. You can have limitations to say the family office shares can never move further than this many degrees outside of. And I think that's quite a useful stipulation right at the beginning, because what you don't want is you don't want to end up in a very complicated, fragmented setup where someone says, I've got £2.50 and I've got £2.50. That's not useful. So again, that's why I say in our 5-step plan, really, we start with the scope. We start with who's in the family and what we think family looks like. We then talk about target operating, governance, decision-making, and metrics. So to me, Maxime, really good question. Thank you. Yes, definitely needs to be part of governance, and that should be a discussion at the beginning, and it should be a discussion that keeps being revisited. Because again, as we know, families change, things happen, hopefully all good things, but not always. So we need to look at whether that remains proportionate.
Talking about this governance, and one of the things, if you take it to extreme, the way like more advanced family offices are being formed and the way they're being governed reminds you of a well-run company eventually. So do you think, is there a possibility, like, I don't know, at some point that, family offices could go public?
So that's an interesting question. And I want to say, why would they? Because what you get at a family office, we talked about the privacy, we talked about the control. So if you then go public, what are you giving up? I think there are some more commoditized providers, like multifamily offices. And we've seen that in the hedge fund world, and we've seen it in the asset manager world, where you almost become a centralized pooled resource. I think those I can see going public, but then that's more the back office, that's more the outsourced.
No, what you're going to get is you can get leverage on capital, right?
Exactly.
Because there you can do more.
And then you create an investment vehicle.
Investment.
Yes. And there are some. It's interesting. There are actually, I think Jeff Bezos has set up a venture capital vehicle, Bezos Expeditions, as I think it's called. And really that's what he uses, where he manages his own family wealth. And I think, don't quote me on that though. We can look that up, but that's, I think, a way of doing it. You could say, hey, my family office is so good at managing all this, I'm now almost creating co-investment opportunities. But I'm not sure you would want to go public with your own family office, because at that point you would have to publish your own wealth.
Yeah. You need to sort out the governance first.
Exactly.
I think one of the some more questions here. So from somebody thinking to set up a family office, it sounds Masha Yeliseyeva. What should be the initial priority for someone planning to launch a family office?
Thank you, Masha. Again, I think that's a really important question. So I've talked about this 5-step plan, and really the first question is, what is your current position? Do you already have some legal entities that contain family wealth? And it could be that you say, no, we only have the entrepreneurial business, we only have the commercial side. And then that's a different matter. But if a lot of people might already have set up a fund, they might have already set up a vehicle in one of the friendly locations. And that again, so it's that as is. So the first step is to say, what do you have? Who are you? So we draw a picture of who's in the family, we draw a picture of the assets. And that can sometimes be much more complicated than we think, because people start with, oh, it's only this, and then, and this, and this, and this. Okay, what do you want as part of the family office? Do you want the multiple residences involved, or are they not inside of that? So again, it's that question, Masha, I think, is to say, who are you? Who do you want to be part of this family office? What are the assets you want to be part of this managed? And then that next question, when we start to think about the target operating model and the activities you want included.
Okay. I'm not sure if we have any like offline questions here. I think we don't have any more questions online.
Well, let me ask you a question, Alex.
Oh, sure.
So if a family office comes to you and they say, we want to diversify away from our current asset holding, what should we do? How do you talk to them?
Yeah, that's not an easy one, and I think it ties back to all the things that you mentioned about principle, governance, asset allocation strategy, strengths and knowledge about particular sectors, etc., and the size of the family offices, the level of professionalism of people. But in general, what we're seeing, obviously, we're in the alternative space, and on our side, we've seen a dramatic change in the last, give it like 4 or 5 years, from the peak of the market, where people were basically trying to catch the growth. Stock markets were all-time high. They're still quite high, but a lot more volatility versus 2020, 2021, and like the years preceding that. So what we're seeing now is that people are like rethinking. People are coming out from like, a little bit of a coma of 22, 23, when nobody wanted to do anything. Things were on pause. People were trying to understand where they are, where's the bottom, trying to understand how, if you're sitting on top of an asset and if it's generating cash, like what is happening to the asset that is the backbone of your family wealth, or what's happening to your private positions, public positions, where you are. So that's been the dynamic in 22, 23. I think now in the last couple of like 24 and now going to 25, what we're seeing is that people are trying to form more active strategies in terms of allocations, trying to diversify, trying to basically maybe rebalance the portfolios, public to private, and also within the private side of things, they're trying to understand, okay, what are my existing relationships with general partners, and basically what are we, which relationships do we keep, which relationships do we cut, what new relationships are we open to. On our side, I think, Flashpoint, we are an asset management platform, an asset management company. We're offering several strategies to our family office investors. And I think that's the beauty of what we're doing, because then, people place money with Flashpoint, not specifically into any particular strategy. And then we can sit down and discuss and decide, okay, how much liquid do you want to be? Like, do you want dividend yield? How much duration do you see for your capital? What's the risk return profile? And depending on that, we can basically see where it makes more sense for them to allocate in terms of maturity of the assets of companies that we're doing. And then with us, you can allocate, into funds or into particular specific co-investments. So that's what we're seeing. I think it's an interesting, market that is changing. It's changing not only for the family offices, but also for us as managers. I think we need to think hard, how do we deliver more return, and think about liquidity more, because I think distributions and exits was very much neglected over the last sort of couple of decades. People were more thinking about allocation to capture the growth. But now exits and distributions are coming on the first front, and that's where I think people will be making their decisions more and more.
Yeah, and I think it's really interesting you're talking about exits. So obviously, from our perspective, and that's what we do at Risk as Service, is that governance. And I will always say the successful exit comes with good governance. because the more your board can help your investment to grow and to make money and be successful, the more likely and more quickly you have an exit. We have another question. A question on ESG, so environmental, sustainable, and governance. So should family office think about the E, environmental, and S, sustainable matters? Or is it less important as long as it's part of the family office values? So I think that's a really important question. And I think I want to start this off with whether or not you have ESG as part of your investment strategy is a decision, right? So I think that's when we talk about investment guidelines and risk appetite. That's one of those to say, do we want to look at our portfolio? Do we want to structure our investment making decisions by these criteria? And again, that is the prerogative of the investor to decide. But I think once you do it, you need to actually do it. And that's really important. Like everything else, you cannot claim to do ESG investing. You cannot claim to look for ESG value and then kind of not really do it. So that comes back to my, you need to scope properly what you want to do in your target operating model, and you need to measure it. And obviously, when we talk about ESG investing, what we talk about here, it could be, giving you a single name selection, but as we talked about strategies, actually could be much more saying, well, we think about impact investing, we think about value alignment, we think about actually, and it could be that for the family office, the E and the S actually come through in their philanthropic. So it could be that I say, in our family office, we are committing to funding research into recyclability of plastic. It could be that we are saying, as I think Chanel has just announced, we will focus on reusing materials in the textile cycle. So it could be in many
They can definitely
areas.
afford that.
They need to. Yeah. I think it's really important, right? So again, if we think about what E, S, and G mean, is they're not just part of the investment strategy, but they can be, and they should be, but that's one element. As a family office, actually, you have much more opportunity to think about E, S, and G through the scope of your activities. Is that helpful, Maxine? Do you have anything?
Yeah, that was quite comprehensive. Carolin, I'm not sure if you have any more questions, guys. No. Well, thank you very much for your time. It's a great pleasure, great discussion. Thanks for stopping by in our London office, and we had a quite good conversation. Thank you very much. Thank you, guys. Bye-bye.
Bye.